Hello guys, welcome to another educational video on flip option. Today we are going to be talking about the moving averages, not just the moving averages, but we are going to be talking about how to use the 50-day moving average and the 200-day moving average, which is the golden cross and the death cross. Let's quickly dive in. What is moving averages? Moving averages are one of the most commonly used technical indicators. Not just the most commonly used, but moving average is simply an indicator that is used to smooth out price fluctuations to help you distinguish between typical market noise and the actual trend direction, which simply means it shows you trend direction, where is price heading to next, and how you would be able to capitalize on the movements of price. Also, the moving average is not like every other technical indicator. The moving average indicator helps you forecast future prices, and that is what the moving averages entails. We have different types of moving averages. We have the 50 moving average, 20-day moving average, different moving averages and how they work. But we are going to be focusing on the 50 and the 200 period moving average. All you have to do is to add the moving average to your screen. It does not really take much time. All you have to do is to go to the indicator section where I'm actually pointing at presently, and you click on it. Clicking on it, you can see we have different types of indicators showing on my screen. What you have to do is to add the moving average to your screen by clicking on the moving average. When you click on the moving average, we have the moving average showing on my screen, and you can see we have the settings, but the settings are not actually accurate. You have to change it to the 50 moving average first. So let's change the decimals to 50. Changing it to the 50 moving average, we can decide to change the color and the thickness, and you can see we have the 50-day moving average on my screen. Here you can see the lines on my screen. For now, the 200-day moving average is actually left out, so let's quickly add it. How can you add the 200-day moving average to your screen? What you have to do is to go back to the indicator section, then you click on the moving average again to add another moving average to your screen. Now, this other moving average you add to your screen, you can see it's in red line on my screen. You simply need to change it to 200. Changing the period to 200, you can see we have another smooth line on my screen, and you can decide to change the color to a blue. Changing it to a blue, you can increase the thickness also, and that is just how to set the 50 moving average and the 200 moving average. You can see both of them looking very clean on my charts. You can see the green line represents the 50 moving average and the blue line represents the 200 moving average. Now let's quickly move forward to explain what the golden cross is and what the death cross is. Also, I'll be talking about how the 50 moving average serves as support and resistance. Now, taking a close look, you will see that we have the green line, which is the 50-day moving average, crossing above the 200-day moving average. Now, when we have the 50 moving average crossing above the 200-day moving average, we say we have a golden cross. When the line crosses above the 200-day moving average, we say we have a golden cross at this point. It's called a golden cross. When you hear anything about golden cross, you should know that price is actually bullish. Also, when you hear about a death cross, the death cross is basically talking about when the 50 moving average crosses below the 200-day moving average. Let's quickly look for an example and I show you how it is. Let's go to the 15 minutes time frame to see some examples. Now take a look at this. You'd see that we have the 50 moving average crossing below the 200 moving average. Now you can see when it crosses below it, you can see that we have a bearish price movement, and that is known as a death cross. When you hear anything about a death cross, it's simply telling you that we are going to be having a bearish price movement. You can actually use this as a forecast in your technical analysis, whatever strategy you are trading. After carrying out your analysis, you can check out the moving average and see if we have a death cross or we have a golden cross to know where price is actually heading to next. So basically, when we have the golden cross, it indicates that we are going to be bullish, and when we have the death cross, it's simply telling us that we are going to be having a bearish price action. Take a look at this. We have the 50-day moving average crossing below the 200-day moving average, and you can see, look at this, we have the 50-day moving average crossing below the 200-day, and we have a bearish price action. Now, how can you trade it? When we have price immediately crossing below the 200-day moving average, which means the 50-day moving average crossing below the 200-day moving average, you should open a short position or a sell position. And now, when you open a sell position, you should make sure your stop loss is above the 200-day moving average, and you can also be trailing your stops when the 50-day moving average keeps going down. That way you'll be able to secure your profits. Also, when you have price crossing above, or you have the 50-day moving average crossing above the 200-day moving average, we say we have a golden cross. Look at this, it's called a golden cross, and we have a bullish price momentum. Now, using the present price action as example, explaining the support and resistance aspects of the 50-day moving average. When we have a death cross, meaning we have a bearish price action, and you see that price is tapping on the 50-day moving average, you should know that that is a very strong resistance zone, and we will continue to have a bearish price movement. Look at this, we have price tapping on the 50-day moving average, and it keeps dropping after doing that. But now you can see that when price crosses above the 50-day moving average and retest it, it means we are going to be having a bullish price action to the upside even before price crosses above the 200-day moving average. And that is how the moving averages work. You can actually add it to your strategy and check how it works properly. Most importantly, the moving averages does not really work perfectly with scalping, because at times when you check the lower time frames, it gives false information and false market direction. But when you use it with higher time frames, the trend is usually clear and it indicates the bullish trends and the bearish trends. Also, don't forget, in this video all we discussed was that we have the golden cross and we have the death cross. When the 50-day moving average is crossing above the 200 moving average, we say we have a golden cross. And when the 50-day moving average is crossing below the 200-day moving average line, we say we have a death cross, which indicates a bearish price action. And that is everything about the death cross and the golden cross. See you in the next video.